Did you click on it?
Yeah, can, hey, let's see. Let me test.
Yep.
I think I'm good now. Can everybody hear me now? Oh, my bad. I was talking to myself for so long. Sorry about that, guys. There we go. All right, sorry about that. I appreciate that, Darth. Darth came to the rescue. I was like, uh-oh, something bad happened because Darth's calling me in the middle of this. My bad, guys. I had to actually, I was late to the scan because I had to re-download Streamlabs, and I guess I didn't have that audio set, so appreciate you, Darth. All right, well, let's run it back. The last 15 minutes I was talking to myself, so I gave myself some pretty good practice on what I wanted to talk about, I guess. So let's recap what I went through, right? So basically, hope everyone had a great weekend. I don't know where you guys lost me at because I think some people could hear me. I asked if you guys could see my screen, and everyone said yes, that they could see it. So I don't know at what point I lost you guys, but I'm glad you guys can hear me now. Yeah, claps for Darth. Oh yeah, Nick, awesome. Glad the one-on-one worked. Cool. All right, so what I was saying was that this week we have an action-packed week from an earnings perspective, guys. Don't play earnings. Don't gamble into earnings. There's a 1 in 3 chance that you guys are gonna, hit the earnings, because even if you get the move right, you have to get the implied move right. Like the stock has to move within the implied move, and it doesn't always work out, right? So make sure that you guys don't play the earnings, or if you do, play very small lotto size. I'd much rather play the earnings flush, which is what we've been playing, and we have some really, really nice earnings potential setting up this week. Action-packed earnings week. We post the earnings calendar in the room, so you guys can see, what's in there under the earnings calendar channel. But Apple, Google, Ford, Amazon, McKesson, all after hours on Thursday, which is going to set up for an electric Lotto Friday. A lot of opportunities probably to be made on Friday. So that could be huge. Could be really, really big. So we've got opportunities all week. We could flush a lot of names this week. We'll see if it's in the implied move, and if it's within the implied move, then we'll take a look at the volume on the lower time frame, and we'll flush it, and we'll call it a day, right? We'll try and hit a few of those one and dones. Another thing to keep in mind this week, AI theme was pretty hot last week towards the end of the week, right? AI, artificial intelligence theme was hot. We have SoFi earnings tomorrow. UPST is another name that could move off of sympathy to SoFi. Both have high short floats, short interest on them. So I am looking for a big move on UPST, and we've been playing that really well throughout the past 2 weeks. So UPST is going to be a top watch for me, and we'll talk about that when I go into the weekly setups and things that I'm watching. We'll bring up UPST. Chris, the earnings flush, real quick. There's a lot of videos on YouTube on that, but real quickly, what that is that if you buy calls or puts on a name going into a binary event, options, market makers price in an implied move on the options. Meaning, right, if I buy, let's say SPY is going into this, it's not going to, let's say SPY, let's say Tesla, right? Let's look at Tesla real quick. Let's say Tesla is going into earnings, right? Even though they just had earnings, but let's say they're going into earnings, right? And their earnings are, let's say they had their earnings after hours on Friday, right? We closed Friday at 177.90. And let's say that options market makers were pricing in a move on Tesla that had to be over 188 or under 170. Let's just say that's what the implied move was, whatever that percentage is. If we open right here flat, basically the premium, right, the implied volatility is going to be crushed. The premium, because the implied volatility priced in a move over 188 on calls and under 170.94 on puts. And if we trade within this range, the value of those calls and puts that someone bought here is going to be decimated at open, because they needed that implied move to be hit in order for them to actually realize true value on those contracts, which is why you see those crazy gains on earnings plays, when someone buys, let's say, a call option, and if Tesla were to rocket to 200 off of an earnings thing, it beat the implied move by $12, whatever the dollar amount is. That's when you see people with crazy gains on earnings, right? You either see crazy gains or you see big losses on earnings. Hardly ever do you see someone open flat on earnings, because when the stock opens flat, the calls and the puts get toasted, and the flush strategy is that we buy that toast and we turn it into some gourmet toast, right? We buy someone else's trash and we turn it into treasure, essentially is how it works. We're buying contracts for pennies on the dollar because someone bought, a gamble into earnings. They bought a contract for, let's say, $200 per contract, and they open up their brokerage account the next morning, and at open, their contracts may be worth, $80, $90. So they're down like 50% plus, right? So they're just trying to get whatever they can to get out of that position, and we're buying that and playing the momentum. So on that 2-minute time frame, if we see big volume and big buying stepping in, we're going to buy calls, especially if we're over a key level. We're going to buy calls for, let's say, 80, 90 cents, and probably within 5 to 10 minutes, those calls are going to go right back to where they were, where they bought them. So we're going to buy them at 80, 90, and they're going to go right back to $200. Right, so basically over 100% very quickly. Same thing on puts, right? If the volume steps into the downside, we'd buy puts and we'd flush the puts down. So that's how you play earnings, and anyone in the room can tell you about that. We've played a couple earnings now. The reason I'm excited about Friday is because last time Apple had earnings on a Thursday, they actually opened up flat, and Apple went about 1,900% that Friday. So Apple could be a huge earnings flush play. But we also have Amazon, we have Google, we have Ford. We have a lot of names this week that we could potentially flush. So please don't lotto into earnings, or don't play heavy into earnings. If you want to gamble something, go buy a Powerball ticket, or go buy a scratch off for $10. I'd much rather you guys do that, or go to your local casino and then come back and let's play these earnings flushes with a predetermined strategy. I'd much rather you guys see you do that. Peloton also has earnings on Wednesday. I know the room, we love Peloton to the downside, so we might just for the nostalgia of a play Peloton puts. But all right, so also this week, guys, we have FOMC week, so we have rate decision coming on Wednesday this week. We're going to know what the rate hike's going to be. Looking for 25 basis points to a 0 basis point hike, looking to see if they're going to actually slow it down. Now, if you remember the last time the Fed talked, the one thing they did talk about was the fact that they would look at pausing rate hikes depending on how what the CPI print was. So this is where you have to kind of use context clues to see what's going on. I think the market is pricing in, a 25 basis point move. I think so, relatively flat out of that. If they pause a rate hike at this FOMC, I think we rip out of that. And if we get 50, I think we're going back to the 390 area is what I'd be looking for. Over this area, I'm looking, targeting 415, 418 by end of week if we rip out of there. So kind of what I'm looking at. Basically an action-packed week this week, a lot of volatility, so a lot of opportunity for us to, hone in on our craft, on our process, and just overall, become better traders one day at a time, right? And like I always tell you guys, win big, win small, lose small. If we do that at the end of the year, we can call ourselves professional risk managers, and you'll owe a lot of money in taxes next year because you did really well, and that's a good thing, right? So before we start talking about individual stocks here, just a reminder, guys, that this is all educational content. These are all my ideas. These are not recommendations to buy or sell any security or any option contract within the underlying asset group. So let's go ahead and get started. I want to talk about SPY. I want to recap SPY first. Let's see where we're at, where we finished on Friday. We ultimately closed at 405.68, and we ended pretty flat in the after hours session, about 405.40. Like to see where we are tomorrow. That was a pretty big sell on the 15-minute. You guys can see we kind of pushed up. 2 rejections. If you guys have been in Moneyline for a while, you know that this is what we like to call a buyer exhaustion candle. You can see these on the 5-minute. You can see these on the 10-minute. You can see them on the daily. I remember when Darth actually shorted Apple on a candle just like this. I think it was on a weekly time frame. He pretty much swung from the top rope on Apple. Did really, really well. Essentially, what these candles look like here, the 315 candle on SPY, it's a buyer exhaustion candle, right? So this candle opened at 407.46, and it closed at 407.46. So within 15 minutes, we went all the way up to 408.16, came all the way back down, and we closed, right where we opened. Which means Buyers tried one more time, and sellers stepped in over this key level. Sellers were pretty present here, and subsequently, right in the next 45 minutes, we came all the way down to 405.55. So these candles typically, and again, typically, because in the markets, we don't know what's going to happen. We can only play the probabilities, but the probability of us pulling back when you see a candle like this on an uptrend over a key level is pretty high based on what I've seen in the market. I think this lends itself to a really nice downside opportunity 7 out of 10 times, right? And a 70% hit rate is really, really good. So these are the levels that I had going into the day on Friday, right, on SPY. So what I noticed, a lot of people asked, how do you get your levels? What's going on here? I didn't have this 406.06 level. This is what I'd call an intraday pivot level. Let me make this a little bit bigger, and let's color it a different color. Let's do purple, right? This is an intraday pivot level right here, this purple line. A lot of people ask, how do I get intraday levels? Like, how do you come up with an intraday level? What is an intraday level? Well, basically an intraday level is just an area, right, that buyers or sellers would typically step in at intraday. I didn't have this level beforehand, but today, for whatever reason, sellers are stepping up here, buyers are stepping up here, so I need to make sure that I put this on my chart, because every time we're coming to this level, something is happening, right? And that's what I noticed. So at open, right, we get green candles, green candles, green candles. We're over our key level. We get a wick under our key level, and we start pushing up, but then we get smacked right here, right? We get smacked at this 406.06. They push us over, and they pull us right here and close us here, right? Next candle, right? We open right at 406.06. They push us up over it. We come back down, push back up, we close right here, and then we make our way back down to our key level, right? So there's 2 rejections at 406.06 here, and I didn't have it marked on my chart just yet. But I noticed that, hey, 2 candles in a row on the 15 got smacked there. Just something to note, something to watch. So fast forward a little bit, right? We come back here, and on the 11:45 Eastern candle, what happens? We wick off of the high of 406.06, right? Funny how that works, right on the dot, 406.06. Next candle, push over, we reject that 406.06 level. Now this candle, we did close this candle at 406.07, so basically, technically 406.06, 406.07, it closed right at our level, right? I wouldn't say that buyers stepped in yet. I would say that sellers still kind of have control, because if buyers were going to step in, the high on this candle, right on this 12:15 candle was 406.11. I would have expected us to kind of hold that level and push higher, but buyers were not able to do that. Darth from the top ropes. Yeah, he's a stud. So the next candle, guys, the 12:30 candle, you'll see again, buyers tried to step in, and buyers made a better attempt here on this candle, right? They actually pushed us all the way to a high of 406.54. So our level again was at 406.06. So they pushed us about 52 cents higher, but then they pulled us back down, and we closed underneath that level. So now, right now, I'm looking at this level again. I'm saying, hang on a second. This morning at 10:15, 10:30, 11:45, 12, 12:15, 12:30. We've rejected this, right? There's 6 rejections at this level, right? So there's an hour and a half worth of candles that have rejected 406.06. So that's why this now became an intraday pivot level for me, because sellers told me that at 406.06 they were in control, right? Sellers, I'm in control, I'm in control, I'm in control, I'm in control, I'm still in control. Buyers tried here, but sellers said, nope, I'm still in control, and then boom, right? The 12:45 candle, buyers said, nope, I'm in control now. Took us all the way up to high of day at this point, right? We made a new high of day on SPY here up until this point, and we got a candle close at 406.35, 30 cents over our key level. So then what happens, right? We're watching. So this is where I told everyone, if you guys remember on live, I said, I'm not interested in going long on SPY until we can close over 406.06 and confirm that 406.06 is now an intraday support level, because to that point, right, we had had an hour and a half worth of candles, 6 15-minute candles that rejected 406.06. All 6 of those candles, right? So this is where I became interested, and this is where I was discussing this with myself earlier when you guys couldn't hear me. This is where entries really come into play. Everyone asks me, Strat, how do you define your entries? how do you hold your positions? Like, what are you looking at? What's going on? I had a one-on-one with a community member this evening, and we kind of talked about this. And this is where I said, like, hey, look, if my key level of risk that I'm using is 406.06, you could have the same exact key level, the risk as me, but I could come out of that trade if we lose that level, losing 15 to 25%, and you could come out of it losing 40 to 50% or more. And you might ask why? How is that possible, right? Well, if you just buy a breakout, if you heard me say 406.06 is a key level and we break out over it and you buy a contract here, right? Oh, you can do that, right? But if you're using this level down here as your risk, if you bought up here and we close on this candle all the way down here underneath this level, well, now that's 15, 30, that's 45 minutes, and now you bought all the way up here at 406.75, and now we're down here at 405.75, essentially somewhere down here, right? So 45 minutes, and we've decreased $1 on the underlying. You're probably down on a 0 day, likely 50 to 60%, right? Now me, on the other hand, I'm buying at my key level, right? I'm waiting for a key level, so I'm buying. I see this hammer candle here, right? So some people asked on Friday, what about this candle? You can buy this candle for sure, but being that this was such a big resistance level, I'd want to see this like actually truly hold support, right? Because we had 1, 2, 3, 4, 5, 6 15-minute candle rejections. I'd like to see more than just one bounce on this level because it is such a big area of pivot here intraday for the longs and the shorts. So to recap, we break out. You don't buy up here, right? We're looking to get long on a pullback down here, and here is a 15-minute pullback. But I'd want a second 15-minute candle just to make sure, right? Just to make sure that this truly is support. And what do we get? Market makers on the 15-minute chart, which again, I don't think a lot of retail traders are using 15-minute, but I love the 15-minute chart now. It's one of my favorite ones to look at because it plays its level so well. We come down, we come back up, and what do we get? A hammer candle, right? A hammer candle that closes right at our level, right? 406.06. We close right there. The next candle opens, and the rest is history, right? And I said, if we get a candle close over 406.06, my next target is going to be high of day, which to this point was right here, right? 406.77. And over 406.77, I'm looking for 407.86, which is a key level I gave in the pre-market huddle. Hammer candle, you're risking a 15-minute candle close underneath this 406.06 level, and your profit target, the first scale, is going to be the high of day, and then 407.86. And what happens? Well, we get to the high of day, you scale some here, and you let the rest ride until we get to that 407.86, right? And that was a pretty easy trade that went a few 100% on Friday. Ray, Strat, did you wait for the second 15-minute close or bought during that 15-minute? So I actually didn't play SPY here. I was giving my analysis to everyone in the room. I think Jeff Skilling was playing SPY, and he said, I told him, I said, this is how you need to do it, right? 406. Look at the 15-minute. Look at 406, and notice too, like I don't have any EMAs. I don't have any indicators. This is strictly naked price action trading, right? I'm just looking at price action and I'm looking at levels. Where do buyers and sellers step in at? Where are the key levels of interest that these buyers and sellers step in at? Because that's where I want to take a trade. I want a high probability setup, right? And much like I say, I wouldn't sell in the middle of a level unless this is a high of day test here because we rejected this area, right? 1-2 times. So and this is an area here where like before this candle starts, right? You can see this candle here. We did get a, if I put a level here real quick just to show you guys. Put a level right here at the prior high of day. On this 15-minute, we did get a wick over that. So sellers were kind of still in control here at this 406.77, that high of day to that point. We rejected this again on the 15-minute, and then the next candle, we took out high of day, and we made our ascent all the way up to the next level. So I like to trade level to level. I think that's what helps me stay in trades longer. And then buying or entering your contracts near a key level gives you a better entry because now if it does go against you, right, in this case from 406.06, if we get a candle close at 406.82, right, now we're down 34 cents on the underlying. So we might have a 15, 25% stop on 0 days. But to the people that bought the breakout up here, they're down a whole $1 over the last 30 minutes, right? So using the same risk level, I'm losing a lot less. They're losing a lot more just because of where they bought at. VinB, I got 190% on 0 DTE. Nice, that's awesome. Really, really excited for you. That's great. So yeah, that's kind of just a real quick SPY recap. Just wanted to show you guys that real quick too. I want to show you Tesla. I talked about this in my one-on-one this evening with Nick, but I want to show you guys this too because Tesla had a major run, major squeeze on Friday, up 11% on the day. Similar setup here, guys. You see a naked chart, no EMAs, no VWAP. Just a 15-minute chart and strictly just my key levels that I give out every morning in the room. This is what I'm looking at, right? So when we open 45 minutes by 10:15, you know, we're over a key level, so now I'm interested in going long. As soon as we got over this level, I did buy a small starter position here. A small, it was like 1 or 2 contracts. I just wanted to have a placeholder here. And then I ended up adding a lot more. I ended up having like 24 contracts on Tesla 170s, and I wish I had all of them because they went crazy. There's a few trades on Friday that actually went really, really crazy that I didn't have as many contracts as I wanted to have. But it was like over 20 or 30, something like that. But basically, right, we got over this level. 165.31. I added a starter here, and the reason I added a starter is because I'm a mobile trader, so it's easier for me to add more when I have a starter position. And I didn't want to move. I didn't want to miss this move either. Like I didn't want to miss a retest on the 15 in case we didn't retest and we just kept going. Like here's an example, right? Break over a key level. We didn't really get a retest on a 15. We just kept going. I didn't want that to happen, so I just added a small size here, knowing, right, that let's say my normal position size is $1,000, right? If I take a starter size of, let's say, $200, right? Like I put 20% of what I'd normally put in on this candle. If we do get a 15-minute candle close on here, I might be down, let's say 40%, right? So on $200, 40%, I'm down $80, right? Because I bought up here instead of buying down here. I'm down $80 on a position that I would have taken, $1,000 on. So now I lost, quote unquote, 8% on that trade, right? Versus buying a full position here at $1,000, seeing it go down 40%, and now I'm down $400. I'm only down $80 if that happens, right? So I buy a starter, watch this next 15-minute candle. When we get the hammer candle, then I add more contracts, even at a lower average here, I added some more contracts, and then we just started pushing up, right? Started scaling out my next key level, waited for the next key level break, which we got. We confirmed it. We pushed up to the next key level, sold a little bit more, pushed up to our next key level, sold a little bit more, pushed up again, sold a little bit more, came back down. The reason I didn't stop out here was because, again, on the 15-minute, we broke out of this key level. This was resistance. Now it's support, right? One candle of support, and then we got a wick underneath, and we held the support. We held it again here, and then we pushed it up to our next level at 179.39, and then ultimately 180. These went to 180.45, and this is where I sold my last contract at, I think it was 2:29 or 2:28 Eastern time I sold my last contract. Sorry, let me have a drink of water real quick. All right, so that was a Tesla recap, guys. That went 2,000%, and simply just let me show you too what I showed Nick on our one-on-one. We looked at Tesla, and I just said if you didn't want to trade on the 15-minute, you could have traded on the 5-minute as well. For those of you that like the EMAs, let me just show you what that looks like, because you could have used the 5-minute as well. And then I'm going to give you some setups this week that I'm watching, guys. Some setups that I think you're really going to like, and I think we'll really bank on this week. Sorry, I hate how Webull makes me wish there was an easy way to and maybe there is, I just don't know how to do it, but zoom in and out of your charts. So here's the 5-minute, guys, and here's an example of Tesla using the 13 EMA on a trend day on the 5-minute. When we went over the 13 EMA, exclude the key level. I mean, you can still look at key levels because you can see how the stock reaction on these key levels, but the 15-minute is like goated for levels in my opinion, because like here you see like a lot of like up and down over levels, but if you flip to the 15, it's very clean cut and dry on like what the key level is and where we're acting around it. But look at this, if you over the 13, if you bought a pullback on the 13 and if you just use the 13 as your stop loss to get out of a trade, like I'll get out if we lose the 13 EMA on a candle close, right? Basically on that pullback here, you could have bought at 10.05 170 calls, and you're not selling those calls until you're up here when we lose the 13 EMA at 1 o'clock, right? So you're basically $9 in the money, and you never had an indication to sell at all. So when people say, how do you hold? Well, it depends on what your strategy is, right? But if you're a trend trader, why are you selling anything on Tesla? You know, and that's what I tell people who, when they go back and say, man, I got stopped out of Tesla, or I sold here, and I'm like, well, why? Why did you sell? You know what I mean? And more times than not, it's the emotions of it. Oh, I was up and I didn't want to give it back. I saw us kind of pulling back, and but remember that that's normal. You're gonna have pullbacks in a trend, right? Stocks don't just go green all the way up, right? It doesn't work that way. Sellers are going to be taking profits along the way. That's just the way that it works, right? But if you use something like the EMA, like a lagging indicator to be your risk level, in this case, if you're trading Tesla on a 5-minute chart and you bought down here on this EMA retest somewhere, or even if you didn't even buy on the EMA retest, even if you bought up here, right? Like you're going to see some drawdown on this pullback here. But if you use the 13 as your risk level to close out of this trade, you could have literally rode the 13 EMA all the way up, all day long. Basically you'd be over 1,000% at this point. Well over 1,000%, probably up into the 1,500% here. And all you're doing is just risking you're not selling anything. I mean, you do want to scale out some at key levels. It's easier said than done now, but you should still have runners all the way up here, because your runner position you shouldn't sell until you lose that 13 EMA, right? And then when you lose it here, that's when you can sell, right? You can sell here if that's going to be a risk. But for me, I trade on the 15 and I wasn't using the EMAs here, but for trend traders, this is what you want to see on a trend. So when people say, how do you hold? It's like, well, if I'm trading on the 5-minute, I never saw an indication to sell, right? Because we just kept putting in higher highs and higher lows. Pop, pull, pop, pull, pop, pull, pop, pull, pop, little pull, pop, 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 little pull, pop, pull, pop. Like, this is the type of price action you want to see as a trend trader. So for people that stopped out, that's where I kind of get confused. I'm like, well, why did you stop out, right? Nothing would have told me to stop out of Tesla longs, but other than the fact that I did just scale on the way up. Now, I left a lot of money on the table by scaling, but as a trader, number one goal is to protect our profits, and risk management is key. So something else to look at from Tesla, just a different flavor to look at on the 5-minute chart. All right, so let's take a look at some individual setups that I'm looking at that I like. First off, let's start with UPST, because this is one that I think is going to be a big mover this week, especially if the AI theme continues. I know some people made some money on UPST. Let me jump to the 15 here. Some people made some money on UPST. This is one that I like to play, and it plays our key levels predominantly, really well. I think someone in the room actually played that 1811 level. I've had these same levels, guys, for a while. I haven't changed my UPST levels. Nice, Nick. He scaled at every level, made huge gains. That's legit. Oh yeah, Daddy Warbucks for sure. Yeah, he did. I saw that. So yeah, you just every level you're scaling, right? And so this is huge where you break a level, buy a retest of a level, and when we break on a 15-minute, you could always zoom into the 5-minute or the 10-minute, right? It's essentially the same thing is happening on the 5-minute and the 15-minute, but the 5 minutes just giving you a little bit clearer of a picture of what's happening, right? So on the 15-minute, if you look here on this break where we broke 1811, let me show you what that looks like on the 15. Here's what the 1811 looks like, right? You're watching it, and bam, we break it, and you're like, damn, I didn't get a retest on the 15. But what the 5-minute shows you is that you got to break out at 12:10 Eastern, and then at 12:15 Eastern, you got a retest on the 5 of here, and we pushed higher. So you can use, I mean, it's interchangeable. You could use 5, you could use 15. You know, I tell everybody, I mean, you guys know, typically I'll flip between 5, 15. I'll even look at 30-minute. I'll look at hourly closes. You know, pay attention to the clock when you're trading. You know, it's all about court awareness, court vision. For point guards, they have to know where the clock's at. Same thing as a trader. It's very similar to being a point guard and being a basketball player on the floor. You got to have chart awareness. You got to know where people are at, defenders. If you're long, you got to know where sellers are going to be stepping in at, right? Just like if you're trying to break a press, you know where the defenders are going to be at, so you got to figure out a way to, how are you going to handle them when you get to them. And then, you know, they have to have clock awareness too. They got to know how much time is on the clock. And very similar here in trading, we have to know how much time is on the clock, because on those hourly changes, we can see some volatility, right? On the, you know, at London Open at 11:30, we can see some volatility. So it's very similar, but UPST is one that I like, guys, because if we look at the daily chart, this is going to have some levels on it, so it's going to make it's going to look a little crazy, but we can see, right, that there's relative rotation into growth names now. When we bottomed out here at $12, UPST has really big short float. There's a lot of shorts packed in here on UPST, but you can see all of growth names are starting to make a rebound. Like, we're getting ready to get a sector rotation, and we have gotten a sector rotation into growth names, right? So what I'm looking at now specifically, look at the volume that we got on Friday on UPST, 9.5 million, right? Relative volume speaking, when you look back relatively, what was the volume that we got? You know, well, when we bottomed out here, we were at like 3.3, 4 million, 3 million, 5 million, you know, and then we started to ramp, right? When we started to ramp, look, 7.6, 8.5, 8.8, right? We started to ramp, we got some volume. Like back-to-back days of volume. Same thing here, right? We started to ramp and we started gapping up. What do we have? 9.7, 17.8, right? 12 million. From a volume perspective, we're starting to ramp up on UPST on Friday. Now, I don't know if that's going to carry into tomorrow. We don't know that, but this is a name that's going to be on watch for me all week long, because this could turn into a situation where we break through our key levels, and I'll add these key levels with you guys. We'll add some more levels up top overhead. But this could be a situation where we play UPST, and UPST absolutely explodes this week. Like, the weekly candle could absolutely print on UPST, which means it could turn into something I start as a day trade, and then as the day goes on, we just keep busting through key levels, key level, key level, key level, and we end up swinging some stuff, to the next day. UPST is huge because UPST also has an AI component with it, and AI, that's the theme going on right now, right? AI is a big theme happening. This could be an area that could potentially this is a key level I'm on right here. Sorry, I'm just gonna mark this while I have you guys. I just noticed that, and real quick I'll show you how I found this level. But AI is a theme, right? And so AI could be the next thing that goes if money moves into AI. UPST has an AI component, and it has a really high short float. So when shorts start to cover, that's when you see this volume pick up, right? Volume picks up and we start to explode. Now, the reason I just added this level, let me show you guys. I don't know what's beyond this chart this way. Probably not a lot, because UPST, yeah. But here's what I'm looking at on this chart. So we bounced here, right? Sold all the way down, bounced, and popped all the way back up, right? Sold down, didn't come all the way down to it, but kind of close, and then bounced up. Came down, held it on the daily, held it on the daily, held it on the daily, crashed through it. Okay, right? So prior support, we lost it. Now I'm looking for it to become resistance, and there it is. 1 resistance, 2 resistance, 3 resistance, 4, 5, bam, broke through it. Right? So now I'm looking for, again, prior resistance to now become support. We break through it. Here on this daily candle, support, 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 break through it. Bounce at this level, this 2010 level that we have, right, that we've been playing to the upside. Next candle, push back through that level, 2264 again, right? So now we're looking for it to be support. Support, support, support. Crash through it, right? All the way down, and now that we're down through it, I'd look for it, now that we're under it, for it to become resistance. Since the last time we saw this level, it was support, but we lost it, right, on November 1st of 2022. So what happens when we come back to it? Well, on November 11th, 2022, November 14th, and November 15th, it was resistance, 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 sell. So now, on the way back up, what I'm looking for is a breakout of this 2010 level, right? I'm looking for a move to 2264. So, I don't know if we're going to get that in one day, but that's what I'm looking for. If we break 20, and I'll get more levels in between here, because with a name like UPST, we have to have a few more levels in between here because there are areas that we'll stop at. What I'll do is I'll go to the 15-minute chart and I'll go back into these days and figure out last time we were here, how did we react on the 15-minute chart? Because like I always say, the same traders, institutions, people that were buying and selling here in November are going to be buying and selling here again at the end of January of 2023 and beginning of February of 2023, right? Just like we're trading the options contract, we were trading the options contracts here, we were trading them here too, right? Stocks have personalities because typically the same people are buying and selling them. No different. So UPST is huge. I'm going to be watching this one. EMAs that I use, if I use an EMA, they're 13, 48, and 200. If you're not playing EMAs, do you stop out your runner at the break of a lower level? Yes, Chris, that's the one risk, I guess, to playing levels is that you could potentially miss out. Like, you could basically give back a few more gains on that. But what I like to do, like on, let's go back real quick and I'll just show you guys. On Tesla, if you were playing key levels, once you're up that far and you're trending, like from a key level perspective, what you could do if you wanted to, right? You could switch from a 15 to go to a 5-minute once you're up in here and just say, okay, you know, we couldn't get up over this level, so instead of you know, waiting for, you know, next level down, like I'm just going to wait for a pullback to that EMA and a close underneath that, like, and you could close out here. You could just close out underneath this EMA, or you could actually wait for a candle close underneath this, right? Because if you close out here, you're going to lose opportunity cost. You're going to lose less than if you wait for a candle close maybe down in this area. You're potentially going to give back some more profits. So it just, strategy all depends on who you are. All right, here is BA, guys. BA is an interesting name to me because we're starting to get into some consolidation here on BA. If you look at the daily chart, you'll see the range that we're in, kind of this, I think that's the 214.05 area, all the way down here to basically, what level is this? I got too many levels. I think it's 203. Let's see. Sorry, guys. Yeah, 203.90, right? 203.90 all the way up to 214.05. Kind of a flag, right? Like we have this move up, and then we have kind of this flag that we're putting in basically in this area, right? So like when we break out of this consolidation range, that's going to be, you know, lend itself to a big move, I think, on BA. That's what I'd be looking at, basically looking for something to break out of that range. So BA is going to be on watch for me. You guys know that BA typically likes to release news at the beginning of the month, and February 1st is on Wednesday this week. So make sure that you guys have BA up at the end of this week on your charts, and then into next week, because BA likes to release news at the beginning of the month. If you remember on Spaces a few months ago, I was able to catch BA for like 3,000%, and that was because there was news at the beginning of the month, but I saw a big volume spike that morning in BA. It was I think it was a Thursday. Yeah, probably a Thursday. And I saw it at like 10 o'clock. I saw a big green candle. I was like, something's going on here. That's not a. I mean, it was like 3 million volume, but they kind of sold it back off, but someone loaded shares, and then that afternoon at about 1:30, they announced that they had like a $3.5 billion order that hit, and instantaneously those contracts went to, you know, about 1,800%, and then on the next candle went like 3,000%. So that was a crazy trade. But all that to say that BA typically moves really, really nicely. As you guys have seen, we played it a few times, and news typically comes out on BA at the beginning of the month. So this will be a big one for me to watch since we are in this kind of like flagging pattern, right? We popped up, we had good news, and now we're just kind of consolidating. So BA is top watch for me over 214 to go long. And then under whatever level we had there, 203.90 would be a nice move down. Could I go to the 15? Sure. Here's the 15 on BA. Disgusting price action, by the way, on Friday on BA. Just consolidation, which, again, like when you see what SPY did, when you see what Tesla did, and you see names like this consolidating, it just means that we are in a range, and when this range breaks, it's going to be pretty violent one way or the other, right? So over 214.05, it'll be nice to get a move up to the 216, 220s. Under that 203.90 area, we could have a really nice short back down into the 190s, 185s. All of it really depends, I think, on FOMC this week, and I think you're going to see a lot of names chop. So tomorrow I'm going to be pretty risk off in the morning because I think there's going to be a lot of names that potentially could chop. The ones that I think won't chop or that have an opportunity to go are going to be growth names, and one of the reasons is because Bitcoin, pushed highs. Did we hit 25? Sorry, I just want to see. No, we didn't hit 25 yet. But you can see here on the 4-hour, guys, like what Bitcoin's doing, right? Push up, consolidate, push up, consolidate. Looking for it to potentially push up again into tomorrow, and 25 would be my next target upside on Bitcoin. But if Bitcoin keeps going, that's relatively good for growth names, right? Sector rotation, growth names. Coin actually had a crazy day on Friday, up 15%. Look at that candle that it put in too. Just wild. And I got stopped out of mine. But if I would have bought that key breakout right at 57, my key level there, that would have been a nice move up. I'll have to go back and chart some coin because I don't have a lot of key levels on coin here, mainly because I don't play coin. But dip buyers here at the $31 and now up. They're up 100% on their investment. So whoever was buying coin at 31, if they bought it, sold it up here, they just made 100%. So I would expect us to see some pullback here. People probably start selling a little bit. Next level that I probably want us to go to is like the 63.25 area. Again, just looking here at this level, kind of how we held that, and then when we broke down through it, we kind of crashed down through it. So I'll just go ahead and mark that here while I have you guys on the scan, so we can mark that. 63.24 would be the next upside level I'm looking for, but you guys can see on the daily. Let's zoom out on the daily and take a look. Right, very similar chart to UPST, and that's not a coincidence. That's because these are both growth names. They're in the growth sector. Typically speaking, right, when interest rate environments increase, growth names see the biggest downside draw, and household staple names like Kraft, trying to think of some other ones we could use, Kraft, Coca-Cola, names like that typically perform really well because they're not sensitive to interest rates increasing, typically, right? Like Kraft, Coca-Cola, they don't need a lot of debt to grow their business, right? They're not running on high price to earnings ratios like a name like Coin, UPST, SoFi, Affirm, all of those like high growth names that are companies that have the potential to grow, but they have to use debt to grow. And when interest rate environments, when interest rates are higher, it's more costly for them in those environments to actually grow because, for simple terms, it's going to cost them more money to borrow money, right? Their debt is going to cost more, which means their free cash flow is going to be less, which means that their price to earnings valuation is going to be down, which means their EPS could potentially be down. The margins are going to get tighter because it's costing them more money to grow than what it was costing them, let's say, in 2020, 2021, when we had a very low interest rate environment. So all that to say that you saw what UPST was doing. It was curling off this bottom. Coin curling off this bottom, right? What I'm saying is that if the Fed comes out this week and says 0% rate hikes, growth names stand they stand the chance at gaining the most out of this. Just like I said on CPI, if CPI comes in flat or under, growth names seem to reason for me that growth names would fare the best out of this. Same thing here. If FOMC comes out and they slow down rate hikes, coin has the potential to basically make its way back to the $75 area. And I know it sounds crazy, but if you look at the chart here, there's not much resistance over this level. Over the 63.24, like there is not a lot of resistance back on coin until we get back up here, you know, at this area where historically they've stepped in at, right? We tried to hold it, we lost it, rejected, broke through it, came down, we gapped down underneath of it, then we rejected, pushed up, we held it, rejected, pushed up, held it, rejected, right? So if we can get over this level of 63.24, to me, there's massive upside on coin back to the 75, 77 area. And I'm not a bullish person on coin because I don't really know that I trust coin long term, but for upside momentum, coin is huge, right? If we break over this 63.24, coin stands to reason for me that coin could see a really nice move along with UPST, along with names like Affirm. I haven't even looked at Affirm, but let's look real quick. I guarantee you, I'd be willing to bet some type of money that Affirm has a similar look to it. Yeah, it does. See? Curling off the bottom. All of the growth names are starting to curl off the bottom. 862, push back up, right? We'd have to chart some levels here to find areas of Affirm. But actually, here's a level right here where we basically topped out on Friday. Support. Resistance, popped over, resistance. So you'd want to see basically 1645 hold on Affirm to potentially open up a long swing trade on Affirm for, you know, a move back up. Basically targeting potentially, you know, this area up here, this 2173 area is what I'd be looking for, somewhere in there. I'll go back and I'll put some levels for Affirm out there, but this is what's called like relative rotation, right? Like we're money is moving out of other names into growth names. That's why all the charts are looking similar. Just for giggles here, I wonder if SoFi is looking the same. Yeah, SoFi, same thing. See? Bottom starting to curl, right? All of the growth names have been beaten down, and now that there's talk of potential slowdown in rate hikes, there's no coincidence that growth names are starting to push, right? Because smart money is saying that if rate hikes slow down, growth names are going to fly. Just like they did in 2020, just like they did in 2021. The reason all these growth names flew is because the rates were so low. What's up, Travis? Are you yelling at me saying hello? All right, so that's kind of what's on watch for me, guys. Let's one more name I guess we'll talk about real quick is going to be Netflix. This one's interesting to me, and I'm sorry the levels here are a little crazy. I don't want to take them off because I really like my levels and where I've kind of had them. But Netflix is interesting to me because we have the potential to get back to 400 pretty quickly this week on Netflix, depending on how FOMC goes, right? Like, bringing that energy, bro. Yeah, I love it, Travis. There's a lot of lines here, so sorry it's kind of crazy, but the point that I'm trying to make here is that Netflix has the potential to basically get back to that 400 area, you know, very, very quickly. Specifically, I'd look first target upside, long target upside would be 392, but a swing trade potentially on Netflix could work out because, again, just like I said, Netflix is a growth name too. That Netflix has been on a grind ever since it dropped in that earnings, right? We've just been grinding up. We held this level at 161, but people that bought, you know, Netflix at 160, 162 down here, you know, now all of a sudden, right? They're up, like they're up big, right? So they're over 100% on their money right now. So Netflix was a great investment down here at 162 to go up here and swing some commons. I didn't swing any commons, just trading the options volatility, but those were good long-term ads. But the point of that is that where buyers stepped in here at 162.71, you would expect to see that some sellers would step in here around the 320 area because they're up 100%, and that's what happened. ZM, I like ZM. Yeah, I like ZM a lot. I actually mentioned this in the room. Looking at ZM to potentially swing long, and you see again like starting to curl right off of the 63, starting to curl. We talked about this in the room actually, but yeah, next level I'd be looking at it is like $80 on Zoom, and then we've got a gap fill up here potentially too over 88. We could see 96 pretty quickly. So Zoom looks nice, and they actually loaded June calls on Zoom. The flow, they had about $17 million in June. I think it was $80 calls. So they're looking for a move back up on Zoom, similar to the other growth names. Yeah, Netflix. I love Netflix. Really, just 15-minute levels on Netflix. Because when Netflix moves, it moves really, really well. Look at CVS real quick. And I know, guys, we're 15 minutes past our time slot. So if you guys have to drop, you can always watch the recording after. Yeah, great looking chart here on CVS, Henry. I don't trade CVS, so I can't give too much commentary. But let's walk through it real quick because this could probably help people how I would look at this and how I'd approach it, right? Weekly time frame. Looking at a big key level here on the weekly. This is where we rejected. Yeah, put it right here, right? So we rejected. Well, I'd say we didn't really reclaim. We closed right on it. We held this level, pushed up. Now we're over the level. It was resistance, and like you guys know, I say when it flips from resistance, what does it flip to? More times than not, what are we going to get? A support bounce, right? So resistance, push through, come back, support bounce, right? And bounce all the way from whatever level this is, 86.56 all the way up to 108, right? This is a weekly chart, weekly time frame here. So then, right, come back down. Well, what was it before when we came back down here? Support. Who stepped in at support last time? Buyers. Pushed us right back up to 105. Who stepped in here? Buyers. Where'd they push us to? 105 area. Who's stepping in again here? Buyers. Where could they potentially push us back to? 105 area again, right? So, actually, that's a really, really good chart, Henry. Thanks for bringing that to my attention. That's why I love this room and what you guys do, because I don't trade CVS, but I'm actually very, very intrigued by this chart now, because if we break this level to the downside, I mean, that could be one of the easiest downside trades you could make, right? Because it was resistance, and then we got 1, 2, 3 bounces, 4 bounces. If we bounce again and go back to 105, if we come down and lose that spot, that is such a big weekly support spot now, this 86.56, that if we lose that, I mean, we could conceivably go back to like 77 in 1 week from that 86 level, or even back down here into these, into this area. Dang, I really like this chart now. I like this opportunity for a potential reversal back up here, right? Because when we tested this spot before, we went from 86.56 to 108.63. We tested again. We went up to, what was the high here? 105.89. Tested, went back up. The high there that we got was 104.11, right? So, I mean, if anything, we could potentially keep a trend here, right? Like, this could end up being, like, we could start to get really tight on CVS, depending on how this plays out. This is weekly though, right? So remember, this is a long time, but if at the end of the year we're kind of sitting here and we're in this little coiled range, like, CVS is going to be super tight for a big move down or a big move up. So, yeah, great eyes on that, Henry. I really like that setup. I'll add CVS to my watch list. I don't know how the options trade on it, so we'd have to look at it. Sometimes the options aren't really tradable because they're not as liquid, but big volume on the weekly too. You guys see this too, 64 million shares here. What was the share count before? 30 million on that one. Not a lot there. That's interesting. Huge volume on here at that support level. Yeah, Alec, that's the one thing I was mentioning about growth names too. What you'll start to notice is that a lot of these names are going to start to have similar looks to them, right? Because it's the same people. The same people buy, like people that rotate their money into growth aren't just rotating their money into one company. If I go to buy a growth name and I'm an institution, I'm not going to buy just UPST, and I'm not going to buy just a firm. I'm not going to buy just coin. I'm going to put my money into all of them, right? Like all of the growth names, all of whatever Kathy Wood's buying is typically what I'm going to put my money into if I'm going to, like if I'm going into growth names. Similarly, if I want to rotate my money out of growth names eventually, let's say the rate environment gets higher, right? Rates go higher, and for some reason money starts flowing into healthcare. I'm not just going to put all my money into CVS, right? I'm going to put some of my money into Moderna, into Pfizer, United Healthcare Group. Like, there's a lot of names that you can play. UNH is the other name that you can play, right? Now this one's not as clean cut of a bounce level as what we had on CVS, but these are names that you can play, right? Like the sector rotations, just like in EVs, right? Like if I'm gonna buy EV, I'm not just gonna buy Lucid. I'm gonna buy Tesla. I'm gonna have some exposure to NIO, some exposure to Lee, some exposure to maybe Blink Point Charging, things like that. So you'll start to see these look alike. Oh, he said mRNA. Let's see. Is mRNA, does it look similar? Or are we just saying that's part of the healthcare group? Yeah. This one could get interesting too from a weekly perspective here. If we break out over this level, if we get a candle close, I'll just put a level here so you guys see how I'd look at this from a weekly. If I was going to swing something on Moderna, right? Basically what I'm looking for is here. I'm looking for a candle close over 212. 190-ish. You got a key level there? Yeah, I see that now. Right, so came down through it, rejected, pushed up to that next key level, came down, rejected, pushed up, holding here. So yeah, that's a good, I like that. What did I mark it as? 180, 188, 81, somewhere in there. Yeah. So yeah, these are, so that's what I'm gonna be watching this week, guys. That CVS one really has me intrigued though about maybe potentially swinging something on CVS. I need to look at the options tomorrow, but again, it's all about probability, and 1, 2, 3 times we bounce at this level, and basically bounce from 86 all the way back to 105. So a $20 bounce here. June calls on Moderna, like 100 calls, might be something to look at. Because let me see how long it took us to bounce to these levels, to get back to 100 from these levels. So we were here December. By the end of December, we were basically at that 100 spot. We were here mid-June, and then beginning of August. So that one took us 2 months. This one took us basically a month to get to the 100 spot. Okay, yeah, maybe May contracts. That could be nice. Oh, Henry, he's in CVS spreads. Yeah, makes sense then. You're seeing that. Like that's a great eye from a weekly time frame. So, all right, guys, that's kind of what I got for you. Netflix, be on watch. A lot of the growth names will be on watch. We're gonna watch Coin tomorrow. I will post the charts tomorrow morning for you guys in the pre-market huddle. For those of you guys that are new to Moneyline, just real quick, I'll just tell you this a little bit. We are a free trading Discord community. You come in, we do have free chat for you. There are some channels that are free. There is an area to upgrade to premium if you want to. Typically what we do is we live trade with everyone, regardless if you're premium or not, on Mondays. And then Tuesday through Friday, we typically live trade with our premium members. Part of your premium membership, though, for $50 a month, you're going to get Sunday scans like this every single Sunday. I did tweet this out to all of my Twitter. So, anyone that wanted to join tonight could have joined with us. But typically, this is reserved for our premium members, and then the pre-market huddle before live trading happens with our premium members. live trading every day for our premium members. And then we do weekly classes every single week on Thursday evening at the same time, 9 to 10 p.m. Eastern, for an hour. The schedule is looking really, really good. I will give you guys a little bit of a teaser. We have a special guest coming in this week, or this month in February, to talk about his strategy. Super smart guy, super valuable strategy. I'm really looking forward to hearing his strategy and how he trades and how he's been as profitable as he's been. The couple thousands of percentage gains that you'd see on his account are kind of crazy. Just because he's been compounding his win rate so high as well. And then I'm actually going to do a Levels 2.0 class. So I did a Levels class in January, but there's been a lot of requests for me to do another Levels class. So I'm going to do another one of those. We are going to have a class on the 2-minute strategy. And then I think we're going to have a class on flow and potentially on drawing Fibonacci extensions. I know there's been an ask for that from people to kind of put a class together on fibs, and even myself, I'm not a big fibs guy, so full disclosure, I won't be teaching it because I don't know enough about fibs to teach it, but I will participate in the class because I'd like to learn about it. It should be a really good month, guys. And so recap, we do have a big earnings week this week. We have FOMC this week, so tomorrow, this whole week in general, it's not a week to really play super heavy. There's times, guys, when we can put our pedal to the metal, and I promise you tomorrow is not going to be one of those days until we figure out what the market gives us. Typically, I don't like to do that anyway on Monday. I'd like the markets to digest the weekend news, everything that happened over the weekend. Let's see what happens tomorrow, and let's see if growth names continue to fight strong throughout the week. And like I said, I think if FOMC comes in and the rate hike, basis point hike increase is 0, or even if it's 2.5, I think the fact that we are slowing down rates, the growth names, it's only going to help these growth names push higher. So they will be on watch for me coming out of FOMC. But like I said, I think SPY upside, I'd be looking for, once we crack 410, I've been very vocal, it's going to be 415 to 418. Downside, right, if we lose 400, if we lose 400, we're going back to 397, 396.50, and then ultimately looking at 393 downside on SPY. Larger time frames here. So depending if we're dovish or hawkish, we don't know. We'll find that out on Wednesday, and we'll trade price action. We won't react. We won't predict. We'll just react to it. So thank you guys for coming on tonight. I know we're a little bit over. Appreciate you hanging on with me while I was going through some of those technical difficulties. Thanks for being a part of Moneyline if you guys are in it. If you're not, like I said, you're welcome to join free Discord. We're going to be trading with everyone tomorrow. Really looking forward to getting after it and just continuing on kind of our run that we've been on. And if you guys are red, like I say, tomorrow's a brand new week. So if you had a red week last week, tomorrow your P&L is 0 tomorrow for the week. So start building good habits today that lead to better habits and better results tomorrow, right? Do things today and do things tomorrow in trading that are going to set you up to be a better trader the very next day on Tuesday, right? Don't do anything crazy tomorrow that's going to hinder your chances of taking an A+ setup on Tuesday because you took a D- setup on Monday. Every day, like I tell you guys, we hit bangers a lot in Moneyline, and I'm not shy to tell anybody that. Like, we hit thousands of percent plays, we hit hundreds of percent plays, we hit nice scalps for 20, 30, 40%, right? Like, we do it all. And I'm not worried about us finding the green plays because every single day we find a play that goes a minimum of 100%, more times than not. I don't worry about us finding the green plays. I worry about how you guys are going to manage your risk and stop out when a play starts to go against you. And if you keep that loss rate, right, at like, let me show you real quick. If you keep that loss rate, hopefully you guys can see my screen here. Yeah. If you keep that loss rate, guys, at a 2-to-1 risk to reward ratio, right? If I'm willing to lose 15%, but I keep my win ratio at 30%, I could only win 50% of the trades I take on a $1,500 account, and at the end of the day, I could be up 6.8% on my account. Now, you might look at that and say it's only $100. That's not a lot. It's not a lot, right? I'll be honest with you. $100 is not a lot of money, but you're also not playing with a lot. You're playing with $1,500. So if you grow your account to say 15,000. And you do the same thing, 15%, you win half of your trades and you lose half. You lose 15% on the trades you take and you win 30, and you win on the 50% that you win. You have a 30% profitability mark. Now you just made $1,000 on a 15K account, right? $1,000 is a lot of money in one day to make. 6.8%. on your account, right? And as you keep growing that account and you go to $25,000 account, if you do 6% on it, now that's $1,600 in a day, right? If you go to 50,000, now you just hit $3,000 in a day, right? Just by doing 6.8% on your account. So it's very easy in the FinTwit community to look at these numbers, this net dollar P&L, and say, man, that's a low dollar amount, right? $100 is not a lot when I see all these people making thousands of dollars and thousands of percentages and things like that. But focus on this, right? This is your golden ticket. These numbers right here. These numbers are the golden ticket, right? Because as you start to grow your account, and when you have, let's say you start with a $10,000 account, look at what these numbers do, right? When you have, a $12,000 account and you do 2% on that, now you just did $270, right? 2% is not a lot, but $270, that's more than most people make in one day at their job. The average American doesn't make $270 at their job, right? And when you have a nice day and you hit a 10% gain on your account or 11% gain, right, on an 11K account, now you just made $1,200 in a day. So keep all of that in perspective, guys, and that's the bulk of this. Why I put this model together was to show you that if you start with $1,500 and even if you just win 50%, if you lose 50% of the trades you take, but you keep your losses at a manageable rate, look at what that does to your P&L, right? Even if you win an average 25% profitability, you lose 20%, you're still going to be up 2% on your account, right? Now, if you do it even better, and you lose 25%, but your average win rate is 50%, which is hard to do, by the way. I'm not saying this is easy. I'm just showing you optically what this looks like. That's an 11% gain on your account, right? So you can tinker with these and see, what that would look like if you do, 25%, 2.3% on your account. So this model is posted in Moneyline. You guys can take a look at this. And the idea behind this was to show you guys that, like, if you kept this rate low, basically what you could do, right? You could make $1,000 in 6 days, right? We start with $1,500 and we took how many trades, right? We took 36 trades. We lost half of those trades. So I was a loser 50% of the time. And I made $1,000 in 6 days because my account balance started at $1,500 with these win rates, with the profitability and risk to the downside. Here's what I netted. Here's my cumulative P&L, right? Losing 50% of the trades I take in 6 days, I'm up 60% on my account. And I basically made $1,000, right? Because my account was at $1,500 and now it's at $2,400. So, yeah, that's what I'm saying, guys. If you can do this in 6 days, that's where I say, like, it's baby steps. But if you put the work in now, it looks like it does. Like, I'm not going to be shy about it, guys. It sucks. When you see people making like $1,500, $10,000, and you're like, damn, I made $100 today. But think about where you're at, guys. It's like going into the gym and trying to bench 500 pounds, but it's like your third week in the gym, and you're benching next to someone that's been working out for the last 10 years. Of course you're not going to be able to do that, right? Just like, of course, you're starting with $1,500, and someone, a multimillionaire day trader has $1.5 million in their account, right? Let's say they have $1.5 million, right? And you see them do $100,000 in a day. And then you see your $101 gain. Like, of course, that doesn't look like a lot. But optically speaking, right, they're playing with 10x the money. You have $1,500. They're playing with 1,000x, I guess. But, you have $1,500. They have $1.5 million. And so that's when you see that. Like, but that's the toxicity I'm talking about at FinTwit, right? Like, go back to the basics here. Anyone can flex a dollar amount, but this is the amount that's crazy. This is the amount that matters. I don't care how much money you made. I care about what is your percent P&L. And if you have a small account and you're consistently doing 3, 4, 5, 6%, when you consistently do 3, 4, 5, 6%, and you have, let's say, a $20,000 account, well, now your 6% in a day is $1,300 in a day. Who doesn't want to make $1,300 in one day? Right? And then when you get crazy and you have an 11% day, now you just made $2,500 in a day. Again, most Americans don't even make that on a 2-week paycheck, $2,500. So that's where you need to start putting things in perspective. And so when you do this, you just netted $12,000 over 6 days by having effective risk management, right? And this is where it sucks when you're growing a small account. I promise you guys, we've all been there. I know it. I know the struggle of it, because you're like, damn, I can only take so many trades. I can only put so much into a trade, and I only made $100 today. But I promise you guys, I promise you, if you focus on this right here, ask anyone that has grown a small account. If you focus on this, you're going to start to add zeros behind these numbers, right? And when you have a 15K account and you're still focusing on these numbers, look at what happened to those numbers, right? We went from a $100 day to a $1,000 day, right? And when we add another zero here, we went from a $1,000 day to a $10,000 day, right? So now over 6 days, you just did $90,000 because you have proper risk management. So yes, small gains suck. I'm not going to sugarcoat it. It's not as they don't suck. It's not as sexy as what some of these other traders will put on FinTwit. But you can be that exact same trader putting those sexy numbers out there eventually if you want to, when you focus on this. Focus on the process and let the results speak for themselves. And if you can consistently do this, your results are going to be growing this 15K account. Because look, if you keep doing this, look, like we took 15K to $2,400 in 6 days. Right? So if you keep doing that, now your 2,400 is going to turn into 3,500, then 35 into, 7,000. Like, and it's just going to keep going. So I posted this model in Moneyline. You guys have this Excel sheet. Please look at this and please tinker around with this just to see like what happens and how much you really, like when you let losers go. Let's say you take an average loss now of 25% instead of 15%. Now we made $34 instead of $100, right? We gave back $70 because we took 25% loss instead of 15%. So hopefully this helps you guys. It's all about, like Alex said, it's all about the process. It's not about the results just yet. The results are going to speak for themselves when you guys perfect the process and when you focus in on being, again, that's why it's called the risk management model. When you focus in on being a professional risk manager, the results are going to speak for themselves. And when we talk about 250 days of trading, right? And when we're doing this consistently here, we just did basically $1,000 in 6 days, and that's only going to grow. You're going to do, a ton of money, guys, in the market if you can be a good risk manager. And that's what it's all about. No one on FinTwit wants to talk about this for some reason. I don't know if it's because people don't know how to be good risk managers, and the people that are selling courses and doing whatever really don't know much about risk management. But no one on the platform really talks about this. No one spends a lot of time on risk management. No one puts together models to show you, here's what it looks like if you start with this, if you take this amount per. This model is built in such a way, guys, that you could risk only 10% per trade, right? So we could risk $150 per trade instead of 15%, or we could risk 20%, right? Like, it's built in such a way that you can change how you want to do all this stuff, right? It's but I built this because I think this is really important for you guys to look at. And if people want to drag all these formulas down, you could drag this down and look at what you'd be at 250 days. Maybe I'll do that and show you guys. Trading is not hard. Like, it's not hard. At its core, it's very easy. The hard part is executing and being disciplined. And this is part of the discipline, right? Stopping out when you're supposed to stop out and take the trades when you're supposed to take them. But if you do this, you guys see what you can do, and it can happen very, very quickly. When you have a 10K account and you're a professional risk manager, well, now you just made now you just made $6,000 in a week. You're on pace to do $24,000 basically that month on a 10K account. Following this risk management, losing 50% of the trades you take, you are on pace to do $24,000 in a month, which is wild to me, right? So now you see why it gets imperative to follow a risk management system. Yeah, just tweet bear flag and then buy calls. That's FinTwit. Exactly. And I'll post my gains an hour after I call for something opposite of what it is, right? But seriously, guys, this is this is what it all comes down to. If you want to be a profitable trader, you have to treat trading like a business, and this is how you do it right here. You backtest a strategy, you follow your strategy, and you manage your risk. And this is how you manage risk, and this is the results of managing that risk, right? A 10K account, you can grow it $6,000. Because as we make, right, so look, day one, 10 grand, we just made $675. Day two, we start with $10,675. We make $721. We did same P&L percent, right? 6.8%. So 2 days, now I'm at 14% of my account. because now I have $1,400 more than what I had on day one. So now I'm trading with basically 11,400, and I have a big day and do 11%. Now I'm up $1,200. Now I'm at 12.7K. So hopefully this helps you guys. I'll post this model again in Wall Street so you guys have it tonight. I don't think I can post it to Twitter because I don't think I can post an Excel sheet. But if you guys want this, I'm going to post it in the chat. I don't think enough people spend enough time talking about risk management, and I think it's very important. If you guys can't see from this little talk right here about risk management and how well, if you follow it, how much you can do it, how lucrative it can get, it's crazy, right? Because if you do this and you take this 10K account to 50K, you're going to be having crazy days, right? So now you're on pace. You just did 30 grand in a week. Now you're on pace to do 120 grand in a month. If you do this in 1 week, you got 4 weeks in a month, right? And 30K net gains, you're on pace to do $120,000 in the month with a 50K account. That's how you grow an account, guys. It's all through risk management. So, all right, guys, that's all I got for you. Like I said, I'm going to post this in Wall Street. Hopefully the Sunday scan helped you guys. Go back and review it if you want to. I'll see you guys in pre-market huddle in the morning. I'll bring the levels. I'll bring the heat. We'll bring the music. We'll try and pump it up if we need to. Yeah, we'll be here, guys. So take it easy this evening. Get some rest. Get some sleep. Enjoy your evenings. I might play a little bit of Call of Duty tonight now that I'm done charting. I'm not sure yet. But that's it for me, guys. I'm out. I'll see you guys in the Discord. I'll see you on Twitter. Have a great evening.